Okay, so I'm doing a post mortem of my short trade via USO puts that I had put on almost 3 weeks ago now, and how I got juked out of the position. So this is really for my trade journal. This is what I like to do: go back in time and review my trades on occasion, especially the big winners I review, and the when I feel that it's something to be learned, I'll review it. And so that's what I'm doing right now. So I'm rewinding the tape back to last Sunday night. I made a video with a short setup, and basically what I was looking at is downward momentum. This tape you're looking at right here is from last Sunday. Downward momentum on these time frames: the 4 hour, the 1 hour, the 15, the 5. There was a intermittent squeeze on the 4 hour, but it keeps releasing to the downside. So that I view that as the pressure being down. And I'm not going to repeat my analysis from last week, but I'm just refreshing my memory and yours that I had a downside bias last Sunday night and was looking for the open to happen and be bearish. And so, and there was a squeeze on the 1 hour pointing lower. There's a squeeze blinking in and out on the 15-minute pointing lower. The 4 hour was already pointing lower, and the 5 minute just fell asleep on the preceding Friday and just was narrowing in this range, coiling up, giving me even more of a feeling that this is going to fire lower. So now I also rewound just the tape of the waveform. So now I'm going to hit play and watch what happens at the Sunday night open last Sunday, April 3rd. So here I'm going to hit play and watch what happens here. So you hit play, boom. So right there I'm like, oh yeah, this is great. I'm feeling smart. Boom. Right after the open and on the 1 hour, I'm thinking, oh yeah, this squeeze is going to fire lower. Pressure's down. The squeeze is flat. See how the histogram's nice and flat in there? So I'm thinking this is great. So I stopped watching, put the kids to bed and whatnot. And then let's just let this play. So of course overnight it's bouncing, no problem. Okay, it's coming back, no problem. And in the early morning, when I saw this, I went ahead and measured this. I'm always measuring stuff. So just threw some fibs on there. I hadn't labeled it, but I just put the fibs on there as if that were a 1-2, just to see. I'm not able to track Monday, Tuesday, and Wednesdays because I'm working on other stuff now. Busy with my business. But look at this. So I'm tracking it, and then later in the day, or whenever, look at that. It makes a new high. So I'm like, dang, is that really 5 up for real? So, to me, it looks like 5 up, and it came right up to the 2618 within 5 cents of that. So it really looked like 5 up. So now in the past, I would have just said, oh man, let me just get out of my puts, and whenever I could up here, I just would have sold them. But a little bit different, what I do now is if this is a 5-wave structure, it needs to come back. So instead of just getting out of my puts just because there's a 5-wave structure, let it come back to see if it really looks like it's going to do 5 up and 3 back. And then at least I can get out of my puts at a more advantageous price, which is still profitable. So here it comes. It starts coming back down, and then whatever day that was, right in the late afternoon, I'm not on screen, but I'm using my phone and stuff. So I see it come back down. So and I got out of those right before the close on on April 5th. So I covered those puts based on this looking like 5 up and 3 down. And is it going to hold support? I don't know, but I can't decide if the market's closed, right? I can only make decisions on USO options if the market is open. So I got out of them right there. And then, it comes back up a little bit. But the lesson is, for me, is I got out of them based on this nano stuff. So the nano stuff is unreliable, as everyone is always saying. The nano, really micro stuff, is just not reliable. You gotta find the sweet spot of structure that's at a time frame that allows for this kind of movement and not get kicked out of your trade. So in hindsight, the lesson would have been, had I waited and said, okay, if it gets above the top of wave 5, that would have been a better place to eject. And then certainly this purple level has really acted as resistance and support, not just right. This is the pivot from this 1-2. So if it gets above there, then this whole downside structure has the idea that perhaps the bottom is in. which could be considered wave 4 because of where this is on the larger structure. See the 236 and the 382. So this could be wave 4 of a larger degree. And if that's 5 up and 3 down, it would need to come back up and keep going. And actually then, whatever 1, 2, whatever this count would do, and then get another 2, and then get above this pivot. But, I got out of the puts based on that microstructure. So that's a lesson there. And then just another thing is watch how this squeeze on the 1 hour, it gets nice and flat. And you've heard me say before, I like the squeezes when they're flat because they have a higher probability. So what happened was the 1 hour squeeze, whoopsie, fired long. And look at this nice flat histogram on the 1 hour. And the squeeze is nice and flat. That is interesting. And then you would have gotten your clues as you're watching that happen. And it comes back down again. But as you're watching this happen, and then flip over to the 15-minute, you may, had I been really watching this the way I trade foots, this right here would have had me thinking, oh man, this is a long setup right here with this coming up on the 15. And then there's a wonderful squeeze, but now you've got upside momentum happening on the 5. You've got upward momentum happening on the 15. The price action is coming up. You've got a squeeze here. See, I would have reversed my thinking had I been, and then look, boom, you get that first 1 hour candle, and look at the histogram. So that is a squeeze firing long after being asleep for quite a while. Boom. And then it follows through. So along, what I would have been doing here, if I were scalping along, is, okay, when it comes back, but it's coming back with great momentum to the upside with a squeeze present on the 1 hour. So here, I would have been dialing in an entry over maybe, on the 5-minute or the 15-minute, I would have been using for entry. Once you see this. So I wasn't watching these screens because I wasn't on screen Monday, Tuesday, Wednesday, but that's why I was trading USO, because I can't be on screen. So I got juked out of my puts, and that's how it happened. Looking at this structure, I got juked. So anyway, just a note to self. Keep an eye on the longer term structure, and keep an eye on the other tools in the toolbox, the squeeze, the and here, this is the setup too, by the way, the 3-1 on the strat. This is a 3-1 bearish reversal, but had this been a 3-1 3-1-2, I'm sorry, this is a 3-1-2 bullish reversal, but had this been a 3-1-2 bearish reversal, I am certain this would have been the squeeze firing to the downside. So it could have gone either way, but it didn't. It fired long. So I was wrong. My setup was there last Sunday night, and I was just wrong. Even though initially, boy, did it look good initially, the way this dropped at the open. But, I also see that a lot of head fakes. Total head fake. I got juked, man. I got juked. All right. Enjoy your Sunday, guys. See ya.